everyone, it's Evan here from the Trade Risk on Tuesday, January 2nd, here with a midweek market recap video. We're going to do a little bit of a condensed version here today, no live stream video, just for the day because we did kind of the whole suite of analysis on Friday, and markets were closed yesterday for the new year, and today was the first trading day of the week, so not a whole lot has changed. A lot of my thoughts are basically in line with what we discussed on Friday, and my belief is, we really don't need to look at all of these super in-depth every single day. So again, not much has changed. So we're going to go through this kind of rapid fire and kind of touch upon some of the levels if they've changed and some of the movement we saw today out of the gates here for the new year. Happy New Year, by the way. And let's jump into it. So this is the S&P 500, and you can see here we are back to the top of the range. We did manage to close at new closing highs for 2018 for all-time sake. So here we go. 2018 is really just kind of following in that playbook, picking up right where we left off from 2017. We got some consolidation, some sideways, consolidation through time rather than a steep pullback through price. And here we are again with that magic bid kind of rallying us off of the lows after a very ugly looking candle to finish off the last trading day of 2017. So we had a nice positive start. One thing that we got right in our last week video, if you watched that on Friday, or if you're on our newsletter, I'll send a link up there if you're not on our weekly newsletter, was that we were looking for range expansion coming into the new year. That's one thing I think that was, not an easy bet, but a fairly predictable bet to get some of that volume back in here and either look for that follow through lower or that magical bid to reappear here for that consolidation to move us back towards those highs. We of course got the latter. We got that move back to highs and closing at new highs in a lot of these different markets. So therefore the uptrend continues. That playbook from 2017 again very much intact here. You can see on the weekly chart, it's only Tuesday, but notice we are trying and testing and right now closing above these recent highs here. So let's see if we can get that follow through, if we can get that strong close throughout the week here to bring us up with a close north of 26.94. That would be very constructive here to start off the month and the new year. If we look here at this daily chart, once again, remember we did consolidate now for about 9 or so days, almost 10 days, moving sideways here. Momentum still strong, indicated by the 8 and 20 period EMA, which is still rising and sort of accelerating below price. And this is a little micro kind of pattern here that I love, is when you see a very bearish close like this, particularly a wide range bar, when you take out some prior structure and everybody kind of looks for follow through here for that structure to be broken and for the sellers to really regain control here. But the exact opposite happens. We get a gap up and we get a gap and go where we don't even come back and fill this close from last Friday. We in fact just push higher and start to move in the other direction. That to me, generally speaking, sets markets up, stocks up to move in a nice quick kind of 2-3 day push pattern in that opposite direction, just because it indicates that many people were offside or got washed out here. We'll see if that happens. There's no guarantee, of course, but I like the probability here for further continuation higher here into the middle of the week, and then come Thursday, Friday would be sort of the interesting test for me to see if we can hold on to those gains and not retrace them back to finish off the week in a more uncertain fashion. So that's the S&P 500. Really, that speaks to all of the major markets. The IWM, again, still kind of sitting in this consolidation here, so it hasn't quite broken out. A nice, again, recovery off of the lows here. It did come back and kind of retest the lows from Friday, though, so it was a little bit weaker, sluggish early on, but it still finished up 1%, still hasn't escaped this supply here, so we're still kind of waiting to see how the small caps act. But ideally, for the bull case, for that momentum bull case, we want to see us 154 plus start breaking out above there, and then that would start to get this rally going in the small caps. I think the story was really the NASDAQ. The NASDAQ was really strong. Technology, some of those large cap names that have been consolidating and sleeping and pulling back, got sold off a bit into the end of 2017, really came ripping back pretty strong. You can see with this move from the 20 period right off this 156, again, a real ugly close here on Friday below this 20 period, and we're kind of looking, will we get follow through lower? And the exact opposite happened. We took out the prior 5 or 6 day highs, and And if you're looking at the NASDAQ, the NASDAQ composite, we actually managed to close at new closing highs here for the NASDAQ. Didn't quite get it in the Qs, but pretty darn close. So some good momentum there. We picked up some shares in the Qs today just to give us some leverage on our existing long positions, and we'll look to trade those out if we get that follow through for the next couple of days. So all around, real constructive start here for 2018. Bulls picking up right where they left off. Let's blow through some of these other markets real quick. We got TLT, which once again now seems to be falling apart. Maybe this is the real one here. We talked about this dramatic move last about the 18th and 19th of December when this really kind of fell out of bed here in this 3-day sellers parade down here. But then we got that strong bounce higher. We failed right around this 127. We did briefly reclaim this trend line, and now we're starting to break back below it on some good volume here. So maybe this is the lower high failure, and we're about to head back down. If we take out 124 to the downside, our next target is down here right around 122 3/4. Look for the for the lower highs and lower lows to develop here. If you're a bear on bonds, that's what you'd want to see. You'd want to see us continue down lower. You'd want to put your stop above this 127, or you'd want to see this pivot maintain itself, and you'd want to see us kind of continue that progress lower. We'll see if that happens. Still, to me, looks like a big headache in here. I'm not really looking to get involved. It was tempting today to jump on this short signal. Probably does get some follow through, but again, just a little too much of a headache there when I zoom out and look at this intermediate term basis over the past 6 or 7 months. There's no trend here, so I really don't want to play with that. I'll just leave it alone for now. GLD continuing right where 2017 left off with some strong momentum to the upside. Take a look at the volumes coming in here, particularly to start the new year, but just over the past 8 or 9 sessions, just green, green, green right across the board as we V-shaped higher. We were accelerating very far away from some of these fast-moving averages. We've taken out all of this previous supply in here. Some very constructive developments here for gold, and I think it signals constructive action on a more intermediate term basis. It's really tough to chase right now, but I think once this settles down in here, I think this type of action here, generally speaking, doesn't unwind that easy, and a pullback in price here in GLD is probably buyable or probably worth a trade, a buy the dip sort of scenario. So I like GLD, can't chase it here, but I like the prospects of it for maybe a trade later this month or in the middle of the month for potential opportunities. Silver, basically the same thing. I don't like it as much, hasn't quite cleared through all this supply, but similar comments do apply here. The metals, generally speaking, are off to a great start and do have some good kind of V-shaped bullish developments here that I do like. So that is gold, that's silver. Let's take a look at USO. Not much has changed there, just continued trend in the short term. And natural gas, very much kind of similar to that GLD, is V-shaped, is off to a good start here for the new year as well. Some good volume coming in. Of course, intermediate term, I mean, you still structurally are in a very different space here, or tougher space for natural gas versus, say, a gold. So I think you're going to be still pretty cautious there. You're going to be pretty tactical if you're going to be trading this, particularly on the long side. But some good potential capitulation lows that got put in here right around this 5 1/4 level over the past week or so in natural gas. So that, I think, covers up all of the major markets. The only other thing I'd want to touch on here, financials today. I mean, basically, for the upside, we had a lot of sectors participating. Financials were not one of them. That they were sort of standouts here. So take a look here. They finished flat on the day, but that's quite, an underperformance given what the broad markets did. Again, I'm not going to read into just a single day. We're still trading right underneath these highs here, and we've been moving sideways for a few weeks, but something to pay attention to. If we see some weakness, more weakness tomorrow below this 20-period EMA, that would be a little bit concerning here for XLF, that maybe this is a distribution top here for at least a short to intermediate term. Something to pay attention to. Again, it still should be given the benefit of the doubt, just given it's hanging up here, but let's note the underperformance today and be quick to adjust our exposure if this does start to break down on some good volume with some range expansion later this week. Also, today was the defensive areas of the market. Staples, I think that's maybe expected, just given the overall kind of broad strength and some of the risk sectors of this market. So materials were weak today, finishing down 62 basis points, and XLU down 93 basis points. This thing is still struggling. Had this big breakdown here late December and continues to just hang out here near the lows. It's back to this 52 level, which has some memory from earlier in 2017 and a little bit in June as well. So those were the lagging sectors. Everything else seems to be performing pretty strongly on the upside. I think I'll cut this video here. Hopefully you guys are off to a good start for 2018. Thanks so much for watching, and I will talk to you again with the full version on Friday. Thanks so much.